I think that the US has hit a wall of debt, especially from a government standpoint, and it's going to be very difficult to get out of this outside of reducing rates substantially. And so I do think we're going to go down that path. And that's the bottom line, regardless of the message that he was saying in regards to being right or wrong, or factually right or factually wrong. I think that clearly there's a financial suppression, message that is much larger than anything there.
Monaco 64, home of alternative economics and contrarian views. Well, today I have a returning guest. We haven't spoken in a while. And yes, he's a fellow countryman from Brazil, but he's in the States, Tavi Costa. And he's also started his own fund now, Azuria Capital. Tavi, welcome back to the channel.
Thanks for having me, Maneko. Very, very nice to be here and looking forward to this conversation.
Yeah, maybe you could tell the viewers your background because you were at Crescat Capital for 12 years. And yeah, now you're starting your own funds. Maybe go over that a little bit before we go into the nitty-gritty of what's happening in the markets.
Sure. Thanks for the opportunity. Look, in the last few months, it's been a very long exercise of thinking about intellectually what I think I do best to start my own business. And I'm certainly not a person who thinks about markets from a short-term standpoint. What I've done over the years that I think have benefited myself tremendously, at least, was really planning ahead for 5 to 10 years, identifying large macro trends, and once you identify those, really trying to express those views as asymmetrically as possible. Um, I think there's a few examples of folks that have done that well in over the years, over history, I should say, that I'm trying to sort of replicate the same model. And look, my goal is to create investment strategies that are very nichey and very specific to a certain macro idea that I believe will unfold in 5 to 10 years. And we'll try to take as a unique approach as we can to create alpha for those ideas. And that's really the point. The first one that we'll be launching will be a mining focus fund. It's really going to be a resource focus fund, but mining mostly, and with other ideas in the pipeline as well for whenever that's up and running. So really exciting to be in this position, and look forward to getting that started.
Yeah, and I don't remember exactly when was the first time I interviewed you, but it was probably 3, 4 years ago. And
Mhm.
since late 2019, early 2020, on this channel, I've been telling people that my feeling is that we're going from an age of paper and financialization to hard assets. And of course, it hasn't been all in one go, of course. It's been quite gradual, and I think we're still got a long way to go. And it was one of the reasons why I was attracted to your views because you kind of had the same, long-term view, especially about hard assets, gold, silver, and mining. So yeah, it's great to talk to you again. And what I wanted to start with is because I saw the clip of this interview that President Trump did the other day with Larry Kudlow, and you even posted that clip, and you said hard assets, and the uh, the post says Trump, and it quotes Trump. Interest rates should be lower. Every point is 600 billion. Think of that, 600 billion. All he has to do, and he means Jay Powell or the next Fed chairman. If we went down 2 points, we don't have a deficit anymore. End quotes. So basically, President Trump is saying if we cut the Fed funds rate down to 175, it's the end of the deficit. But I think that's wishful thinking, personally. Could you? I mean, I have my opinion on it, but I want your opinion on it because I'm interviewing you. So, and why did you say hard assets?
Look, I think Trump has he obviously fantasized that idea, in a large way and extrapolate it in a way that it's not necessarily true factually. However, uh, the government is in a position. I remember looking at a chart a few years back that showed how much we're paying in interest payment relative to GDP, and we're approaching 4 to 5% now. This is a very dangerous path that we're in, and I would say that there's no other economy that is the size or similar size, I should say, of the U.S. or any other developed economy per se that has anywhere close to that level of a deficit. And so this is a real problem. And I would say that, if we take it down to call it, you know, let's say to zero, which eventually I think we're going to have to go somewhere around that, it's going to help tremendously the deficit issue. Then the question becomes, what does that do to hard assets? And what does that do to the repricing of a lot of other things, and especially inflation? I think that the US has hit a wall of debt, especially from a government standpoint, and it's going to be very difficult to get out of this outside of reducing rates substantially. And so I do think we're going to go down that path. And that's the bottom line, regardless of the message that he was saying in regards to being right or wrong, or factually right or factually wrong. I think that clearly there's a financial suppression, message that is much larger than anything there. And I think that a lot of things are mispriced relative to the world that we may see in the future. And you just think about this for a minute. We just changed potentially the Fed chair here with Kevin Warsh. And the idea is that he's going to cut rates substantially. In that interview, he does say that he thinks he made a mistake hiring that person. I do think that if your goal was to take a very extreme dovish president of the Fed to take over that leadership, I do think that President Trump is right. That probably was a mistake. But nonetheless, Kevin Warsh has been very openly talking about how he wants to cut rates drastically. And if that's the case, look, you look at the curve of the market of how many rate cuts we're expecting 2 years out, and it's only two rate cuts of 25 basis points. I think, I believe that there's a very strong case to be made that we're going to see a lot more cuts in the near future. And that part of the market is completely mispriced. So gold is making, coming back to $5,000 an ounce, silver at above $80 an ounce. And we haven't even seen yet that pricing of interest rates change drastically here in the near future. That could be another tailwind for all these things. And so very exciting times to be in the metal space right now.
Yeah, and you said they could even take rates down to zero, and they've brought it down from above 5 to 3.75, and the 10-year yield went from 3.6 when they started cutting, and it's still above 4. I noticed that the 30-year yield is almost at the same level it was a year ago, so the curve is steepening. And I feel that unless they do something artificial like yield curve control, if Warsh cuts rates aggressively in the coming year, yeah, do you think they're going to institute yield curve control? And I think that would be even more like a fuel to the fire of financial repression and fuel to the fire of the bull market in hard assets, gold and silver.
Yeah, look, policymakers are very clever, and in terms of the situation of how to express some of these ideas, and yield curve control, I think has a very bad connotation, just like QE. And it wouldn't shock me if they try to go anywhere around that term, but it's gonna look like it, yield curve control, but we won't be able to say that it is yield curve control technically, which doesn't change the impact that it has in markets. What I'm trying to say is we could see your classic yield curve control coming from the Fed or coming from other institutions like that, or you can also see a place where there's deregulatory changes in especially in the banking system, which allows the banks to actually buy treasuries. That could be a big shift in terms of demand for those securities that could cause the long end of the curve to fall. And so I think that is also sort of a lot of people are thinking from the lenses of all the imbalances we have, that rates make sense to be higher. But once you realize that the rates themselves are the actual problem, um, and if they're trying to eliminate the problem, the only way to do it is actually dictating rates lower, manipulative. And if that's the case, you have to think about the consequences of that rather than, you know, if they're capable or not of doing that. They are capable of doing that. And the consequences are higher inflation, higher hard asset prices, and other things. And so potentially even financial assets could go up as well. So lots of things to consider, but as investors, think about long-term trends. The framework of us thinking about this is the US is in a very difficult position that has to suppress rates. The US also is in a very difficult position that has to devalue the dollar relative to other fiat currencies as well. Why? Because it's not just a fiscal deficit, it's also the trade deficit that is also very pronounced. When you combine the two, it creates a lot of ideas, right, that have been neglected over the last few years. It's not just gold, it's mining, it's emerging markets, it's the rest of the world when it comes to even developed economies when it comes to attracting capital. You can go deeper into the commodity space, energy, agricultural. So all these ideas are likely to be checking the boxes in terms of the stars being aligned for investors to deploy capital into those places. And so lots of exciting ideas will come out of this as well if you are an investor that I think you need to pay attention to.
Yeah, the other thing you noted the other day is that China and the other BRICS countries or Global South countries, they're moving more and more towards trading amongst themselves in their own currencies, but they're also buying a lot of gold as a monetary reserve. And I think it was someone in Congress that questioned Scott Bessent about it, and he did mention that it looks like China is looking to back its currency with gold. That would be another like not a tailwind for higher yields, treasury yields, because it means foreign countries they're going to be buying gold instead of treasuries. And do you think that's going to push the U.S. into thinking about gold as well in the system?
Well, look, I've been of the theory that I think the US is the one also participating in the accumulation of gold uh, here in the market. I think that that's also pushing gold prices higher. Basson tweeted it back in October of 2025 that the rise of gold prices has been helping the government because their balance sheet has obviously improved. But keep in mind, we're talking 3% of the overall, less than 3% of the overall balance sheet of the government. So it's very small, particularly when you look at compared to how much debt we have in the system. And so keep in mind that in the 1940s, the U.S. gold reserves used to back about 50% of the U.S. debt. Today is about 3%. So that's a major shift, right? I mean, if we price gold as if we would have 50% of our debt in gold, gold itself would be probably marked at around $70,000 an ounce, which is crazy. Now, I'm not here to say those things here, but that's the just a mathematical, equation of getting back to normal standards, if you will. So, look, I just think that what we're seeing worldwide with those news of China that you mentioned is that the world is thinking now back again about bringing back discipline, and not because they just want discipline, it's because they're being forced into that, given that fiscal and monetary instability that we're seeing worldwide. And that's going to go, we're probably going to go more and more towards that path of other currencies that will be looked to be backed by gold. But in order to have that, they need to have the gold first. So gold is in a very critical position as a macro asset for the next 5 to 10 years, in my view. If we are with central banks' balance sheets, really heavy on gold, I would change that opinion, but that's not the case here. Now, we all know they're all chasing one thing, and that's gold. And if that's going to occur here in the next few years, it's going to change a lot of things alongside with that.
And what about silver? Do you see silver following gold, or is it gonna lag a little bit or be volatile?
I can't speak for silver in the near term. Your guess is as good as mine, but I do think we're seeing some digestion of a very big move. Um, this is just an interpretation near term, but silver is poised to go significantly higher. If gold deserves to be higher, silver deserves to be massively higher too. So we're in a bull market for metals, in my view. We're far from being done on that, and a lot of the mining companies are still being priced as metals are going to fall, and if anything, they keep rising. It's not even stabilizing; they just keep rising, and so there's a lot of repricing that needs to happen in the mining industry as well. Very exciting times for those that are investors in the space.
Yeah, and that your initial fund, is it gold and silver miners? And if so, what kind of size or kind of sector of the mining space you're looking at?
We'll invest in every place, but I think one targeted aspect that we're going to be looking to break the stigma of the industry that it takes 10 to 15 years to go from exploration to production. Looking for these companies you can't do that with the entire industry. So looking for these companies that have strategically in a position where they're either stuck in the mud for whatever reason and need capital or some sort of rearrangement of their current business to get back or to get into production quickly, to get into cash flowing stage quickly. I think that and one of the main reasons why institutions have shy away from the mining industry is this lack of conversation about when are we going to go into production, when we're going to go into cash flowing stage. Now, outside of the big senior guys, the other part of the industry is kind of left behind with the dreams and of getting into production, but it never happens. And so trying to tackle that part of the industry very well would be one part of my plan. I still really like targeted positions in exploration, and the other side of me that has, I would say, created, especially myself, most of my wealth has been structuring the right deals in the mining industry, and certainly will continue to do that. Meaning. Acquiring assets from majors or buying distressed assets for whatever reason. Now, that's one area that I think I can add a lot of value. So we're going to go there as well. And that's going to be part of a whole package of a portfolio, very focused on mining, but lots of angles there. I call it three pillars of investments in the mining space.
And aside from gold and silver, what other commodities are on your radar screen, Tavi?
Energy is definitely in my radar. I feel like energy is where mining was 3 or 4 years ago. This is the place where you want to be striking deals in the mining, in the energy space and accumulating phase of that. Just because it's been consolidating over the last 2 to 3 years, very likely we'll see a breakout. And as we see a breakout, I believe most of the energy companies will perform incredibly well. I think a lot of people are not positioned for that. And so I've been paying attention for this as a trend. And the other one, that it's not a commodity per se, but it is a thematic idea that I'm paying close attention to is what's happening in Latin America. I think those are structural changes politically and economically that are occurring in that region. And I think that most of the assets in that region are not priced accordingly if that's the case. And remember that that region is also very linked to commodities. And so the growth of commodities tends to be also very positive for their economy in terms of growth. And if you marry growth with very low multiples of fundamentals, I think you can see very explosive moves in the upside. Not to say as well, I should say, mention that Latin America is very, I guess when you look at the world in terms of how much capital is being deployed in that part of the world is very small. And I think that's going to change quite significantly as people start realizing that the critical needs that we have in terms of minerals from the US are probably going to come from Latin America in a large way.
Yeah, I guess that makes sense. Uh, you know, with Trump trying to impose a bit more unity, if you want to call it that, with Latin America in this new Monroe Doctrine for the 21st century. Yeah, I think he's trying to like. Yeah, I think he'll definitely try to work with Latin America if they want to work with him. But the other question, I don't know what you think about that. I also have another question. Which jurisdictions, like in Latin America or South America, do you think have improved the most in terms of stability, political stability for mining?
Hmm. Well, look, I think the obvious answer people tend to say is Argentina, but there's a lot more than that answer. I think that Bolivia is one of the places I've been extremely impressed. I met with the government. I think those guys are extremely trying to really impose a capitalist agenda that hasn't been imposed maybe even in the history of the country. So those things are going to be having a major positive impact in the country in the next few years. They're trying to revitalize all sorts of sectors, and I think they're going to accomplish that. So the way to think about Latin America is there are some countries that have seen a change already politically and economically, and it's driven by the population really. Like Bolivia, you go talk to the cab driver, person that works at a hotel, person that works at a restaurant. You can see that there's hope that this government will do something that the prior leaderships have not done. And that type of hope is what fuels, these types of big changes in governments. And so it was important for me to see that. And so that's one part of it. Places that already seen a change, but assets are still, confused about, is this really a big change? Is this really going to be sustainable, what they're trying to accomplish? Can they do that? Can they, really execute in those ideas? That's your risk that you're taking and investing there. I want to take that risk. I think that's a great risk to take. Now, there's the other aspect that you can take in Latin America, which are places that have not changed politically yet, but do have a gun in their head if they don't change it. And those are Brazil, Colombia, and others, right? Mexico as well. Those three areas are sort of being the places that have not seen the big shift yet. They could see the big shift, but also they're very limited in terms of the leadership of those countries of what they can do under what's been happening. For instance, what happened in Venezuela with Trump administration going there and so forth. These countries are very much aware of that, which creates, in a way, inherently a floor of security, in my view, of South America when it comes to nationalization of mines and other aspects that tend to be very insecure when it comes to foreign capital to deploy money there. I think those things are changing in a big way, and that risk is not being fully taken away of the market, but certainly diminished substantially, regardless of, it makes even the elections in Brazil, for instance, in my view, less important than prior elections because if there isn't a change, still, how much can he do, Lula in this case, to go against the American agenda in a big way? Now, of course, he can impose his ideas, but not as severe as it would be under another regime that we would be in case. And so I do think that that's actually a polarization that's actually positive for financially speaking for those countries. I hope that makes sense.
Yeah, and it's funny because a friend of mine, I told him yesterday I was going to interview him, and he said, "Ask Tavi about Bolivia." So I didn't want to say Bolivia but you actually brought it up, which is interesting. Yeah, that Bolivia is improving.
Well, it's just it's very rare to find a country where you can see a transformational change like that. I mean, I think El Salvador went through that. Nobody believed in it, right? Few people actually invested in El Salvador in a large way to see the change from one of the most dangerous places in the world to now one of the safest places in Latin America with an economy that is doing quite well, and attracting foreign capital and all that. Now, we may disagree on things with Bitcoin and all that, but we have to agree that the country has prospered relative to its other times in history. And Bolivia is in a very similar position, in my view. It's a country that a lot of people like to say, well, let's make Bolivia great again. No, 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 that's not the slogan. Let's make Bolivia great for the first time, right? That's the slogan for them. I mean, that they never been great in terms of attracting capital sustainably, and really growing the economy. Like there's no stock market, there's a bond market that very nobody trades. There's no infrastructure financially. There's opportunities in logistics, real estate, agricultural, energy, mining. It's one of the most unexplored places in the world. It's safe. I walk there on the streets and I walk in São Paulo. I can't have my phone out, right? You can't walk with your phone. I can walk with my phone out in Bolivia, no problem. And so very different places that I think people are not fully understanding. So I'm really excited about the country. I love Bolivia, love Bolivians. The people are great, and I'm really cheering for them, and I'm investing in them as well. So I think San Cristobal, when we invested in San Cristobal, it's been the one of the very few selected stories of success in the country. We've done a lot of good things for the community, and would love to do more. It's just, I don't think this is the end of it. This is the beginning. So very, very exciting.
Yeah, and one last question I wanted to ask you. The proportion of, let's say, in the US in particular, because that's where you are and it's the biggest market. What is the proportion right now of investors invested in the gold and silver space? It's still really low, isn't it? And where do you think it could go to, and how significant would that be?
Yeah, I mean, look, if you just calculate mining industry itself relative to the global equity market, we're about 1%. And back in prior years of peak, which were in the 70s and 1910s, we were close to 12%. So we're multiples away from that. And I would argue that the mining industry is today at one of its most relevant positions it has been in history in regards to structural demand for materials, given what we're seeing in terms of construction, deglobalization, onshoring, and other things. So, not to mention what you just talked about, hard assets, right? I mean, that's another thing, rebalancing and all that. So now gold, when you include gold itself, we're probably at about between 3 to 4% of total wealth in the world today. So, and it's including gold, silver, and miners. I think we're far from where we're going to get to in the future. Prior times we've seen numbers over 10, even 20% of total wealth, and I think we're going to go there at some point. And so I'm really excited. I think there's lots of people have been seeing this rally in the gold space as potentially the peak of the market. You don't fix decades of neglection in an industry with 2 years of good performance, right? So I think there's a lot more to come here, and institutional capital was caught off guard, and it's now trying to catch up with the learning curve of this very complex space, but also rewarding and extremely critical to society.
Great, Tavi. So, could you tell the viewers where they can follow you?
They can follow me on X at Tavi Costa, and also LinkedIn, Tavi Costa. And I think my Instagram is Tavi Costa Macro as well. Happy to. There's also an email, Tavi at azuriacapital.com. It's also in my bio on X, and feel free to contact me on anything. I'm always happy to engage with people.
And when do you think your funds are going to kick off? Any?
I'm hoping in the next few weeks we'll be have my apologies, my voice is a little off because I was sick, but I'm hoping in the next few weeks we've been working really hard to get the fund docs and everything ready. And it just takes time. The legal side of it takes a little time, but onboarding clients in the next 2, 3 weeks would be perfect. So stay tuned. I'm hoping we'll be able to do that.
Great. Thank you, Tavi, and all the best. And yeah, all the best of luck as well with your new venture.
Thank you very much.
You're welcome.